Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Monday, March 22nd, 2010. Well, folks, here we go again. A wild trading day to begin this week as the markets gapped lower on the back of the healthcare bill passing. And again, why would that be negative? Because of the general taxes that will be imposed across the board on anyone making over this amount of money, capital gains, dividends, you name it. The taxes are on the horizon, and that initially caused the markets to panic overnight and sell off. Now, the difference is, normally sometimes we would see this market tank and just gap and go to the downside. Instead, we've been in such of a bull phase in this market, and I have a feeling too many people went bearish, folks. Too many people went bearish. That caused a nice pop-up in this market off the opening move down. Now, what do we mean by that? Well, whenever you have way too many people positioned in one direction, so let's say everyone thinking on last Friday, that this healthcare bill was going to pass. So everyone's thinking that the market sells off on Friday, obviously. Then again, it passes, and overnight the futures tank down 8.5, 9 points or so at the lows. And everyone says to themselves, well, this market's going to tank tomorrow because the healthcare bill passed and everything. Sure enough, that's where it started out on the downside, and then too many people were positioned. And remember, contrarian is one of the key ways you have to trade this market. And all of a sudden, the market ripped to the upside and just continued to go. It went 1, 2, 3 bar surge to the upside, which is a key catalyst. If you look at our webinar, we teach this in our webinar stuff about this. Then you go 1, 2 sideways bar consolidation. That's in spirit of bullish move. And then the market surged again. Another squeeze pushing it through the 200 moving average up to this blue trend line of resistance. You consolidate there, pull back, and then look at what happens. The 200 moving average never gets taken out to the downside. The 20 is sloping up. You have a bullish cross of the 20 over the 50 move, over the 200 moving average, and the markets jump again. Where do we go? Right to my next resistance level. And by the way, these lines are in the charts pre-market movement. I'm telling you that right now. I give these lines out in our nightly videos in the research center, so everyone knows where the markets will stop, where they will halt, where they will pull back to, and where they will find support. You have to know this stuff, folks. It is unbelievably important at this point. All right, so the markets move up to 116.72 right here. 116.70 is my trend line. The markets pull back off that level, and I've now actually had a nice little solid pullback in the afternoon session. Now, the difference is this. Volume, guys, started out decent this morning on the back of the healthcare news and then has very, very much gone to sleep again. And we're kind of used to that. In all fairness, Mondays, Fridays in general, although last Friday was good volume on options expiration Friday. But, you know, today, again, Monday, no economic news aside from the healthcare. We're kind of waiting to hear. It looks like Google is going to be pulling out of China. We knew that was coming. All these little tidbits overall are pretty muted today, aside from the healthcare issue, which was the reason for the heavy volume early on right here. And then, again, look at the volume over here, guys. Just non-existent. The market's going to have a lot of support in this area, and I really, to be honest, unless we see an increase in volume, I do not expect this market to pull back much more. And the reason, again, is you just have no volume. To get through key levels like this, look at this. The 20 moving average right here, blue trend line, and the 200 moving average. This area right here alone is a major, major area of support. If you don't have volume behind it, you're not going to be able to take that support out. One of the reasons why volume is so key to a market is because it can take out resistance and support levels one way or the other, especially on the downside. Volume is key, and that's, again, why it's very hard for this market. Even though it's been a nice little pullback here, you're not going to see it very likely take this out. Now, if you get some volume in here, it can take it out, though, and we have to continue to watch. And if you can take out this level at around 116.35, you have a good chance of coming down to this pivot low at 116.25, and then possibly the 50 moving average or even the blue line right around the flat line, which was gap fill, or essentially gap fill from this morning. And again, just to notice here, guys, notice these third candle and the fourth candle, piercing gap fill, pulling back, and then the pause candle, and then the rip through it. So you can see how gap fill does work as resistance, and you have to understand that, folks. This is really key stuff. Now, let's go over a couple other things. Obviously, on the upside, resistance is double top from today, 116.70. That's going to be that number. If you get through that, you're going to go to gap fill all the way up here, most likely at around 117, and then possibly to 117.15 or so on the upside. Downside supports, you guys know them. I went over them. But again, volume is very key here, and you don't have a lot of volume. Now, we've traded 127 million on the day, but believe it or not, 3/4 of that traded in the first hour of trading, basically. I mean, literally that much, at least half of it, I would say, traded in the first hour of trading, and has to be understood as that being a key move early in the day. But now, again, the volume is dead. Now, going to a couple other things, folks. Let's touch on the 60-minute chart. One thing I like about this 60-minute chart, again, you can see here the gap, the push here. This white trend line that I'm pointing to was a major trend line we followed. As you can see, it hit, bounced off, hit, bounced off, gapped up, and then finally broke through. Yesterday, actually, make that mid last week, we retested those highs, touching that white line again. So you broke down. The key here was not to buy the breakdown, but wait for it to retrace to that resistance level, then short that. Then you had a nice pullback. You had a little bit of an in spirit of bear flag here going into the Friday close. You can see the gap down did occur, which was the completion of the bear flag, but then it just ripped up right away. And as soon as you gapped down, you just went vertical. Market surged to the upside, and now you're actually kind of going sideways to slightly up. Not an in spirit of bull flag at this point because it's angled to the upside, but nonetheless, still a bullish move on the day as this market continues to be supported. Now, a couple ways to look at this. Number one, you could say, well, why would the markets, and this is more conspiracy theory stuff that I want to talk about, folks. Many people will say, well, the markets obviously weren't going to sell off into the healthcare bill vote because if the markets are tanking into that vote, it's not going to pass. You know, too many politicians will say, oh, Obama doesn't have enough capital in his kind of spending, you know, in the mental spending side of things or instead of physical. And again, that's what can push things through. I mean, if he looks like he's doing well, then it's much more likely he can get anything he wants through. So to keep the markets up, and you're talking about propping the markets up here on light volume, that was very, very key going into the vote. Then many people said, well, why doesn't it sell off when it's done? Well, think about this. You're not going to have a sell-off the day after it passes, folks. That's not the way that he wants to start the health care bill passage, because what it's going to look like is that people do not like it, therefore the market's sold. So in many ways, you have to expect an update today, and that's what I came to the conclusion yesterday and today, that there was a good possibility of an up move here early in the day, even if we gapped lower, and that's exactly what happened. And you can see here again, think about it from a logical standpoint. There's no way the day after it passes, the administration or the PPT or whoever it may be is going to flush that market out. It's just not going to happen, folks. They're going to try to keep it up at least for a few days until it kind of subsides. Then later on, maybe they'll let it down. But again, what it all comes down to is volume. Institutions. Are institutions going to sell? They're not buying, but they're not selling, and that's keeping the markets positive here near the highs. You could make a case for an in spirit of head and shoulder pattern, which is another nice little pattern. Here's a shoulder here, head, and now another shoulder. Your neckline actually now becomes right here with this pivot low to this little pivot low. And again, you can see right here, there's your head and shoulder, folks. So again, you could make a case here. You have to roll over, though. You'd have to roll over for this to complete, but you definitely have a little bit of an in spirit of head and shoulder top there that should be watched and utilized. Now, a couple other charts I found fascinating. Apple Computer, take a look at this. This is a fascinating chart. All right, so you take your trend line, and I pointed this out the other day, but look at this. Trend line connected to this pivot low gives you this little pattern. We broke it, right? We held it, broke it to the downside. Just like the spider's retesting it, look at how Apple is now retesting. Now, this is a lot of resistance. If Apple gets above this, it negates the possible breakdown play, and that's actually a bullish signal to a high here if you get above this trend line, all right? So watch it very closely. This is a pivotal point on Apple Computer on the 60-minute chart that you need to be aware of, all right? Now, again, if it does not get above it, watch for it to fall all the way back down, possibly even eventually going back to this level down here. And again, the iPad, I believe, is going to be launched in the not too distant future in the next couple weeks, but could be a sell the news type event on that anyways. But if it does get above this trend line, that bodes well for it to retest the highs here at 127.75 or so to 130, I think. Excuse me, 227.75 to 230 on the charts there. So watch that very, very closely, as again, if you negate this downward breakdown with this one right here to the downside and they're able to fight back up, there's a good chance you're going to go, if you get above this white line, that you're going to go back to the high. So watch it like a hawk, guys. That's one of the key plays here. The other thing to mention here, Goldman Sachs is down $1.85 on the day. Now, you might say, well, why is Goldman down $1.85 on the day? The answer to that is simple. Financial reform is back on the table. Over the last month or so, Obama has gone quiet on that as he's been pushing his healthcare agenda. Now healthcare is done. Guess where the bullseye is turning, folks? Right back to the financials, right back to financial reform. Even Bernanke over the weekend said something to the effect of how we can never let this kind of thing happen again, to where the banks literally can dictate whether we fail or not based on them failing. You can never have that. Therefore, you need reform. And sure enough, financials are heeding that warning. And again, there could be some problematic issues now coming into play with the financials based on the fact that reform and financial regulation is back on the table. It's going to be the next thing talked about here. And again, financials could be under pressure. Take care, folks. Have a wonderful day. I'll talk to you tonight in the Research Center. Sign up now. We'll see you there.